Let me show you the importance of the money management and how easily you can get completely different trading results than you planned it for. What we have here is a trading account of $10,000. We are going to risk 1% on each trade, and our risk-reward ratio is going to be 1 to 3. The blue calculation is going to follow that strict money management, and the orange one is the same for now, but we are going to change some numbers in it. So let's make some trades. The first trade was the loss. Everything's fine because we have some money management in place and we lost $100 in both. It was 1%. That was exactly what we planned it for. Second trade was the profit. Again, reaching all the way risk-reward ratio 1 to 3. Another trade was the profit again. Now you may start thinking, okay, I made $500. Why not to increase my risk a little bit? So we are going to risk 3%. And that was the loss. Another one was the loss again. So after suffering this big loss here and the regular loss here, you may think, okay, let's lower my expectation a little bit because I don't believe the trade will not reach 1 to 3 and I need some money back, right? So once it reaches 1.5, you take your money. Boom. And that was nice, profitable trade. Instead of making $308, we made only $150. Another trade was the profit. Nice, we were in it, so we made our money. Another one was the loss. Another one was the loss. Another one was the loss. So we have 3 losses in a row. So you might start thinking, maybe I will even skip the trade. Everything is lining up on your chart. You see your entry point, everything. But you don't believe it anymore because you suffered these big losses here. I mean 3 losses in a row. You suffered a big loss here. Here you didn't take the advantage of the move. So you skip the trade and boom, that was the profitable one. If only you had entered it. So instead of making $317, what we made is 0. Another trade was the profit. Now you might think, okay, I made profit here because I stuck to my money management. This one would be nice profit too. I know what I'm doing. I need that money, so I will increase my risk. 2%. And the trade, boom, is the loss. Unbelievable, right? Another trade is coming. You are going to lower your expectation again because you don't believe it. And that was the profit. Again, instead of making 3%, $333, we made only 1.5%, $154. Another trade, profit. Finally, we stuck to our money management, so we made exactly what we needed. Another trade is the loss. Another loss. Loss. Another loss. Another loss. Is almost unbelievable. Another loss. Another loss. Man, how can you handle it? How can you handle something like that, right? 1, 2, 3, 4, 5, 6, 8 losses in a row. You cannot watch it anymore. You're going to skip the trade. Boom. That was the profitable one. So look how we recovered a little bit here. We stayed flat right here. Another trade. Profit. Finally, we were in it. Now, look at the results. After 25 trades, the return on the blue one, here we stuck to our money management, the return is 15.58%. On the orange one, because we were greedy, we were afraid, we skipped the trade, again we were too greedy, and we skipped and we lower our risk, we lower our expectation, so we ended up with only 2.61% return. We made 25 trades. Only 10 trades were profitable ones, 15 were the losing ones, so 40 and 60%. And look at the big difference. This table here, what I did, I repeated these sequences 4 times, so I have the numbers for 100 trades. So let's see. So here you can see the difference in the numbers after 100 trades, 80 trades, 30, whatever. So you can stop the video and go over these numbers. So here you can clearly see how important it is to stick to your money management.